Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, Manager of Trader Services at TD Ameritrade, to discuss the levels in the Nasdaq-100 and Vol Q as we get into the heart of earnings season, with Microsoft kicking it off after the close. And Shawn, let's walk through the Nasdaq-100 levels and what you are seeing as it relates to the heat map.
We had a little bit of a pop out here, and right now we're trading up around that 13,500 level, and I expect that maybe to be a price level maybe we trend at least for the near future, as we get more and more earnings and a little bit more of not only a look back at how things were last quarter, but I think even more importantly is some forward-looking guidance from a lot of these companies. I think they're going to have a little bit more of a leg to stand on here in terms of being comfortable providing some sort of an outlook or expectation for their business environment. So I think right now we are going to trend sideways here a little bit. I would note that standard deviations and sort of just what we're seeing intraday in terms of those moves are starting to break out a little bit. And if you look at just the size of those bars over the past couple of months, you really got, I mean, almost difficult to tell where the top and the bottom was, just to show how tight of a range we were seeing on many of those days. We're starting to get a little bit of an increase in that, but the 20-day moving average continues to move higher. So I think that shows that at least there is this upward trend intact. And if you look at the heat map, even on a day like today, it's showing a little bit more of this mixed picture where you do have some generalized weakness out of some of these semiconductors, but the larger components, Microsoft, Amazon, Facebook, Google, are positive, some more so than others, but still remain in the green here a little bit. And that can sort of offset a little bit of weakness in other areas. So a little bit more of a mixed picture here. And I expect maybe this to break out one way or another as we get more information. But looking at Vol Q, it's really showing some bounce off of those lows. And I think a lot of that has to do with just even that standard deviation number moving higher can sort of just drive a little bit of an increase in that forward-looking expectation of volatility. But I don't know that we're anywhere near a breakout to some of those higher levels, which I would say is right around that 30 level. If you get up towards that 30 level of Vol Q, that shows there's a little bit of concern in the market. Right now, I think markets remain optimistic, maybe cautiously so, but still generally optimistic moving forward.
All right, if we take a look at your final chart here, Microsoft, of course, reporting after the close, and these stocks have just done so well, Shawn. I mean, we have to start to justify valuations at some point.
I think so. And Microsoft, though, I think that the forward-looking guidance is going to be key. They've just got so many different product lines. You can think of it as in the stay-at-home trade, there certainly was a lot of this move to cloud. Xbox, that product line, I think, is also going to become something that we could take a look at. I think looking at Microsoft Teams is another product that they're expecting as you get more and more users on board that to maybe drive adoption of some of their other products. And then also, I think the on-site server business unit, that's a high margin business unit for Apple. So I think showing some growth in there could also be key. But looking right now, the markets are expecting about a $10 move in either direction. I'd say that breaks out to about 5 or 6% up or down post earnings. So it's interesting to note, though, that we have seen volatility sort of come off of some of those lows as it's moved higher. And I think what that's saying is, look, if Microsoft doesn't meet what I think is going to be some pretty high expectations from investors in terms of not only what they've done over the past quarter, but guidance moving forward for a lot of these business units, there could be some post-earnings volatility here for Microsoft. But I do think right now, investors feel generally pretty good about where Microsoft is positioned, not only for what we've seen over the past year or so, but also what's to come moving forward, as there's expected to be a little bit of a secular shift in terms of spending priorities from businesses. I think businesses are expected to continue to invest in digital platforms, cloud offerings, and that's expected to also benefit companies like Microsoft moving forward. So guidance will be key here.
Right. And I would agree with you there, Shawn, but it's so interesting when you were talking about standard deviation moves and implied moves, it made me think of Netflix, right? Last week, it was expecting a $30 move. It ended up being like a $60 move. It's a 2 standard deviation move from where it was expected to go, which is so interesting. It seems as if you're getting any sort of beat, and clearly blew away expectations in terms of subscribers that were added on. But it seems as if, the market does have some expectation for performance here. But if you get even an uptick in outperformance, they're just, blowing through these moves here.
And I think a lot of that it sort of has to do with, we refer to the street as the whisper number, just sort of generally what the underlying sentiment is. And I think for Netflix, actually, that was sort of tilted to the downside, where there was a little bit more of a moderation, if not an outright slowdown in growth expected and being priced in. And when we didn't get that out of Netflix's earnings, we actually got quite the opposite: incredible growth, great forward guidance, talked about having the ability to potentially institute share buybacks at some points. Sometimes when you get that, where you're completely sort of in the other direction of where expectations were sort of skewed to on the street, you can get those massive outsized moves in the other direction. And I think that might be a little bit of my concern here for Microsoft, is that I think there is a lot of optimism priced into Microsoft here, because their value proposition, the value of their business units is so obvious. But that can sort of work both ways. If they report any sort of a hiccup, or maybe the street was expecting something a little bit better in terms of outlook, that can really cause some of these gains that we've seen over the past weeks to really be given back. And not only could that cause it more than that $10 move on the downside, you could see a little bit more of a pronounced move lower than higher. But I think right now the market feels pretty good about where they have Microsoft price in terms of outlook, and they're not expecting anything too shocking from the consensus view post earnings. But that's always that risk that's lurking out there, is you do get something completely unexpected by everybody on the street after an earnings report. That's why we pay so much attention to them, Jill.
All right, Shawn, all great points. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.